A very good afternoon, everyone. My name is Axel Threlfall. I'm editor-at-large at Reuters. I am thrilled to be leading today's discussion. Our title is Key Forces Influencing the Global Energy Sector. We've got lots and lots to talk about. This is hosted by the Al-Attiyah Foundation in partnership with LSEG Data and Analytics. Just bear with me while I set a quick context here. As I said, there is a lot coming into play in this discussion. We meet, of course, at a moment when the global energy system is undergoing, I would say, its most profound transformation in more than a century. What was once a relatively predictable linear sector has become a complex, multi-layered ecosystem shaped by geopolitics, technology, finance, climate policy, as well as society's expectations. Governments and industry leaders are grappling with a landscape where energy security, resilience, and technology now dominate this narrative. And that, of course, replaces long-term climate ambition with the more immediate priorities of keeping the lights on, stabilizing prices, and managing the explosive growth of AI-driven electricity demand. Supply chain disruption, a major theme since 2021, continues to affect the energy markets. We're going to talk to our panel about that. We will also talk about significant oversupply, both in the oil and the gas markets. That market, of course, oversupplied, being driven by a wave of new LNG capacity. Energy trade flows are being rerouted accordingly. LNG has now taken on heightened importance, with the US now a dominant exporter and Europe a major buyer. Investment conditions have become tighter and more selective. Higher rates have raised the cost of capital, of course, while policy clarity is increasingly decisive in directing investment. And as these pressures converge, finally, resilience has returned to the center of corporate strategy. As governments prioritize energy security, companies are strengthening their supply chains through a number of areas: inventory buffering, dual sourcing, trade route optimization, reshoring, deeper public-private partnerships, et cetera, et cetera. So we're going to explore all of this. And of course, again, this is our backdrop, our very complex backdrop, perhaps more complex, more intricate than many of us can recall. Very quickly, some housekeeping. If you've got technical issues, issuerservices@lseg.com is the address you want to reach out to. Any questions for the speakers, click on Ask a Question and put your question in there. I'll get to that. You're going to be participating in polling questions, or I'd like to invite you to participate in polling questions. I've got 3 or 4 of those. When you do that, in order to participate, do put your name and your details in the system on the right-hand side of your screen. And finally, this will be recorded, this session, and the recording will be available using the same link. Right, that is it from me. Hopefully I won't be saying too much more. I'll leave that to our speakers, who I'll introduce now. Adrian del Maestro is VP Global Energy Advisory at the Global Infrastructure Consulting Group, AECOM. Alex Martinos is Energy Analyst, International Energy Agency. Amena Bakr is Head of Middle East and OPEC at the Data and Analytics tech company Kpler. John Clark, Energy Strategy and Transactions Partner at EY-Parthenon. And finally, Samuel Good is LNG Research Lead at LSEG. A very warm welcome to all of our speakers. I'm going to kick it off with a polling question, and then I'll start the discussion. And the first polling question is this: what is the single most powerful force reshaping global energy markets today? Geopolitics, national security; B, technological innovation and renewables; C, corporate climate commitments; and D, demand growth in emerging markets. Have a crack at that, and I'll bring you the results just as soon as they come through. In the meantime, I'm going to get things started. And Alex, I think I'm going to kick it off with you with a broad question to you. What is the most influential driver, in your view, now of these markets, of the oil and gas markets? Is it politics, or is it the markets?
Thanks, Axel. Good morning from Paris, and thank you to everyone for joining us today. Axel, I think you set things up very nicely in your introduction at the top of our discussion. If I recall, our executive director, Dr. Fatih Birol, has been traveling around the world highlighting the extent to which we now see geopolitics in particular, as he says, weighing more heavily on the energy sector and on energy markets than we have done in perhaps for several decades now. As a consequence of that, we're seeing elements of the global energy landscape coming into flux, growing more complex and growing more fragmented as well. This means that at the level of countries and governments, we're seeing countries rethinking the prioritization that they give in particular to secure access to energy, but also to ensuring supplies of affordable energy. And in some cases, placing these more highly than they have done in recent years and higher than concerns over climate as well. I would add to that, however, that in response to that, we are seeing countries reaching for quite different levers to achieve these goals. Some countries, especially those that are dependent on imports of fuels, leaning more heavily into continued investment in renewables and efforts around energy efficiency. But others are focusing more on ensuring and increasing the supply of traditional fuels. On this broader theme, though, of energy security, another important aspect of that is that we are seeing that expanding and evolving. So whereas traditionally, and that applies to the work of the International Energy Agency over the last half century, the focus has been on ensuring secure supplies of traditional fuels, primarily oil, but with a greater focus on gas as well in recent years. We have seen that expand and extend to cover a wider range of other aspects of energy sector risks, and that includes secure access to and supply chains for critical energy minerals. As we've highlighted in our research and in our analysis of 20 strategic minerals for the energy sector around the world, 19 of those, the supply and particularly the refining is dominated by China, which on average has a 70% market share in those 19. This high geographical concentration obviously carries significant risks, not only for the energy sector, but also for a range of other strategic economic sectors too. And the final point I would add in this respect is we're also, as we look at a rising share of electricity in the global energy sector and rising economic and political significance of electricity supplies, we're seeing growing focus, as you mentioned, on ensuring the security and resilience of those electricity supplies as well. Perhaps something we can come back to say more about. I guess just to close, though, I would say we are seeing significant supply of oil, of increasingly LNG, of things like solar panels and batteries. This means that producers and suppliers are still looking out to the world to find international markets. And again, to go back to what our international director says, no country is an energy island, and we will all need to engage with each other and cooperate for some time to come. Thank you.
Okay, Alex, thank you very much indeed for that. And as you said, yes, we'll jump into quite a few of those areas over the next hour. By the way, the poll result has come through. A, of course, is the big one, 67% for A, 33% for B. Interestingly, though, C and D, corporate climate commitments and demand growth in emerging markets, got 0 votes. Not so surprised about C, but maybe D. Adrian, let me bring it back to you. Give us your thoughts on that polling result. But I'll also throw this in there. I was going to start with this line in my introduction. Tell me if you think it's fair. Energy is no longer just a commodity. It's a strategic asset tied to national security, industrial policy, and social stability. Fair?
Good question. Yeah, broadly, let me just build on some of the comments that Alex made, because they touched on some key things. I think the first thing is energy security is very much top of the agenda now, and I think that's generally accepted. I think what you've seen is, if you think about the energy trilemma, you saw those tensions that we've seen for a long time between sustainability, affordability, and security of supply. COP15 Paris saw the ascendancy of the sustainability bit of that trilemma. Then you saw the invasion of Ukraine, which raised the affordability angle, and you had that whole cost of living crisis, soaring commodity prices. And as a consequence of that invasion, now you're seeing very much that energy security top of mind for corporates and governments, and that's very much the name of the game. I think geopolitics has always been in energy. It's always been part and parcel of that oil and gas extractive industries. What's interesting is there was an inherent assumption that as we shifted to a low carbon economy, that somehow that geopolitical risk would be mitigated. And the reality is no, quite the opposite. As Alex has highlighted, you have a lot of concentration of single countries that can dominate the refining of a lot of those critical earths and rare minerals that go into the low carbon sector that we're seeing. So geopolitics is very much alive and thriving, for better and for worse. Energy security is very much top of mind. And inevitably, we're going to talk about data centers at some point. So let me just throw in AI here. It's interesting to see that you've got this global AI race going on, led by China and the US, and a number of the middle powers also competing there. If you look at the growth of new AI data centers, the critical factor in the success of that is access to energy and, as a corollary, access to land. And if you look at that national race going on to see who is the superpower, you see all this energy security theme and geopolitics and just energy being weaved in across these different areas. So yes, energy security, access to energy, really, really important.
Are you and I'll ask the same to John, in your dealings with your clients, are you speaking less and less about corporate climate commitments, about the transition? Is the pressure, albeit temporarily, off the IOCs?
I'll make a general comment about just that net zero and what clients are focused on. So on that net zero mood, let's say that's clearly changed. So 2019, UK announced its net zero commitment. You had a plethora of governments and corporates replicating in terms of net zero, and you had the Build Back Better with COVID. The mood has clearly changed, and you're seeing very much populist politics now, cost of living crisis, the cost of actually delivering the transition when governments are already cash strapped, focus on defense spending. There's a lot of competing attention and tensions, and therefore where once it would have been heretical to criticize net zero, now it's part and parcel of some politics. And interestingly, in the UK, you used to have very much cross-party support for energy. Now it's become very fragmented. So I think net zero is definitely on the back foot at that supranational level. I would say that in individual countries, you're still seeing and in corporates, you still understand what the general trajectory is, which is a decarbonization trajectory. And if you look at Texas, for example, oil and gas capital, there's a big growing solar PV and onshore wind play there. So I think you're still seeing that momentum for net zero under the headlines. In terms of what clients want, clients just are focused on resiliency, right? They just need to be able to run their operations like governments in order to as you mentioned in your introduction, avoid the lights going out. And resiliency in that context means you need to have a portfolio of energy options. So you still got your low carbon solutions, you still got gas as a base load, you've got energy storage solutions, you've got nuclear. So you need to have a broad portfolio of solutions. And I think as well, companies have to be innovative about how they manage through these challenging times. And when I say innovative, yes, it's partly technology, but it's also about how you release value from your operations. So a simple example, you may have absolutely nothing to do with data centers, but if you sit on a lot of land with powered grid connections, you can realize the value of making that land available to data centers. So companies are thinking about being innovative in that sense.
Okay, sorry, I don't want to interrupt you. I will come back to the way corporates are playing this in a little while. And John, I want to get your thoughts on that as well, and your dealings with your clients. Amena, let me bring you in here though, because of course, with a news hat on, and I'm constantly wearing a news hat. I mean, the context, the geopolitical context, is busy. And I should have mentioned at the beginning, US and Iran, of course, holding high stakes nuclear talks today in Geneva. That sent Brent crude lower. It looks like OPEC, the last murmurings we got was OPEC Plus leaning towards resuming output increases from April. What are we likely to see, do you think?
Hi, everyone, and thanks so much for including me on the call. And that's right, Axel. I think that OPEC Plus is really eyeing further unwinding of their cuts. They've been pausing the increments during the first quarter of the year, given how oversupplied the market is. But let me just talk a little bit about this idea of an oversupplied market, because last year, all the talk was around a mega glut in the range of 3 to 4 million barrels a day. Now we're talking about 1.5 million barrels a day. So those numbers came down. And there's a realization that this oversupply is mainly coming from sanctioned barrels that can't find a home, and not actually other production from other producers where it's where the barrels are reaching the consumers. So there has been a kind of misconception around how large the oversupply is. Is the market this year oversupplied? Yes, it is, but it's not a glut. Therefore, I mean, the whole idea of the OPEC Plus group is that they want to return the so-called voluntary cuts that have been imposed by the 8 members. And from that point, they will be able to assess the capacities of all the members and establish new baselines to be implemented by 2027. Because we faced a problem where a lot of these countries, on paper, they have a capacity, but they're not able to reach that capacity. So you have barrels on paper versus reality, and we need to distinguish between the both and reconcile that. And that exercise is really, really important at this point, because Axel, I don't think people or the market realize how little spare capacity the world has. If we do get a disruption from a geopolitical situation, we're now talking about, the talks that are going on between the US and Iran, the possibility of the US intervening again in a military operation of some sort. I mean, that's still kind of an option on the table. And if we do get a disruption, how much spare capacity do we have in the system? Yes, we have an oversupply, but how many countries are actually able to immediately put more production? And I think those numbers have been kind of inflated in the past, and the market doesn't realize that maybe with all of this unwinding, we're talking about 3 to 3.5 million barrels a day, and the only countries that could immediately respond to anything are Saudi Arabia and the UAE. So there needs to be a bigger realization that we need to invest more in spare capacity in the system to make sure that, one, it's available, and two, it's affordable. So that exercise is very important. And part of the unwinding process is to get to that conclusion of how much spare capacity is left in the system.
Yeah. Okay. Thanks, Amena. By the way, we've got questions coming in. I just want to remind our viewers to send questions in. I will get to those as in the last 15 minutes or so. With that in mind, what Amena has just said, John, I want to bring you in here. It's a very complex, quite fuzzy context for a lot of the corporates. We talk about managing price risk, maintaining capital discipline. How are your clients managing to do that in this environment?
Yeah, thanks, Axel, and a pleasure to be joining you this morning. I'd like to bring the dimension of time into the discussion. I think a lot of what we've talked about is what's happening right in front of us today, and it's not a surprise that geopolitics has got the most votes in the poll, because probably everybody's read the news this morning and that's top of the news agenda. But I am surprised that some of the other topics around demand growth didn't get a reckoning, because if you're running an energy company, you've got 2 jobs. One is, how do you optimize the returns on the portfolio you've got today? And that's all about the trade flows and trading strategy and some of the commodity uncertainties that Amena was touching on. But you've also got to think about, how do you deploy your capital over a 10, 20, 30-year time horizon. And frankly, some of the things we've been talking about today are probably noise in the context of those strategic decisions. And it's very hard to have a crystal ball and look that far into the future and know you've got it right. In fact, I think most energy executives will know they've probably got it wrong. And the answer is really what Adrian was talking about, which is how do you build optionality in your portfolio? You know, there are some things I think we can all agree on. Energy demand globally is growing. More of that demand is going to be met by electricity, and more of that electricity is probably going to be delivered by renewables. But beyond that, there's quite a lot of room for debate. What is the role of fossil fuels? How do the decline rates sort of fit into that? What's the power generation mix? What's the future of coal? What's the level of demand for AI? I mean, Alex was talking about critical minerals, and it seems to me that everyone's solution today is how do I get more of those minerals we currently think are critical? But actually, the other solution is to find different ways to deliver processes that don't rely on those minerals. So I think the clients we're working with today are thinking about the opportunities that short-term uncertainty give for them to optimize their portfolio, but also thinking about how do they build options for the longer term that allow them to capitalize on this transition that's clearly happening in the energy world and is going to continue to happen. And actually, if I end with sort of a little story, you know, 20 years ago, I lived in North America, and at that time, the US had 10 years of natural gas left. That was the headlines. The US was going to run out of gas. LNG facilities were being built in the US, but they were import facilities. I remember working on one project that was going to import LNG from Russia into the US market because that was how the market was going to balance. Could you imagine the economics of that 20 years later? And that, I think, sort of brings this dimension of time really to the front, that yes, you've got to navigate the challenges in front of you today, but you've got to build the optionality in the portfolio when your crystal ball, as you said, is quite fuzzy.
Yeah. And it's a thanks for that, John. And it's a good segue on to Samuel, who is the LNG research lead at LSEG. I mean, I said at the beginning, LNG has taken on heightened importance. I mean, we really can't overstate that. US dominant exporter now, Europe a major buyer. Where's this big question to you, Samuel, but where's this market headed?
Yeah, so I mean, on a global level, we're coming off the back of a few years now of essentially kind of a global level of price-led demand destruction. And we've basically been waiting with this kind of huge supply wave that was kind of been on the horizon for a couple of years. It's kind of been delayed a little bit. We've had a couple of delays in a couple of projects across the globe, in the US in particular. The thing is, we're in that horizon now. It's already happening. Even this year, we've had the Darwin project in Australia restart. We've just had, I think last week, the first cargo from the second phase of the Republic of Congo LNG facility. We've got more coming. We'll see Golden Pass, I think in March is the latest for the first cargo. So the question is really what happens next in terms of demand. Obviously, we still have this big supply profile coming, and they'll be continue to kind of monitor how this how these new kind of bits of liquefaction capacity come online. It's very key and kind of adjusting around that. But really, it's and kind of goes to answer D. It is the kind of question of what is demand growth in emerging markets looking like? We've, like I said before, we've really had this kind of strong pricing out of demand across the globe, in Europe as well. Look at industrial gas demand in Europe. It's a pretty depressing picture. And the same, we look at China. China for years was kind of seen as the one of the building blocks, or the newer building blocks of the demand sector on the global energy market. It's not looking like that anymore. We've seen kind of often flipping into negative growth this year. Yeah, it looks like it's going to be a bit stronger. We're kind of expecting something like 100 BCM pipeline equivalent LNG demands. But yeah, it's not looking kind of quite as strong. That big, strong, continuous growth is not quite there. And then, yeah, I mean, a lot of that is also kind of going to answer B is it's a lot of renewables growth. You see in China, you see a lot in places like Pakistan, for example. Again, one of those big markets we looked at, kind of to be a big kind of cargo sink. These days, if anything, they're trying to push their contracted energy away, kind of coming to agreements with their suppliers to do so. And then, yeah, kind of on a European level, Europe basically pre-crisis had this position of essentially kind of like a market of last resort. It's large underground gas storage capacity, really allowed it to kind of sink in times of global surplus, and then basically act as a form of supply during scarcity. With the crisis, that really transitioned, and it was Europe that was setting prices on a global level. I'm kind of seeing that really tie in. But as kind of move further forwards, yeah, I mean, we still don't have that kind of strong Russian pipeline gas supply, which did operate a little bit as a balancing act for Europe, as well as underground gas storage. And so Europe kind of, it still needs this LNG. It's no longer kind of able to sit out for kind of long periods of time like it used to be able to. And we could kind of see that, you know, that kind of divertible supply from the US, for example, being pushed into Asia. These days, yeah, that can happen, but not for long periods. So, yeah.
Okay, yeah, great. Thank you for that. And just very quickly on, you know, we've still got that first polling. I've still got that first polling answer ringing around my head, and the demand growth in emerging markets, which you talked about just now, you know, got 0 votes there. Are we underestimating the potential of that growth? I wonder whether you feel and I don't want to delve too deeply into this, but whether you feel that the challenges of enhancing capacity and refining and manufacturing resources in developing countries can be overcome efficiently and quickly enough to get demand up there.
I mean, from an LNG global gas perspective, it's a good question. This is the kind of thing that pre-crisis, so especially when kind of the years of 2020, earlier in 2021, it was things that people would often be focusing on, looking at things like gas to power functions. So often, yeah, it's kind of thing that likes of Car Powership have been doing, where they'll basically take in FCU and kind of link it up with the power plants. That is kind of thing that's quite easily overcome. But realistically, right now it's a question of price and the ability for, you know, when we kind of saw the kind of fuel switching or feedstock switching, how quickly that can get unwound. And there's a question on that, whether it's kind of just a couple of months, a couple of years. But even when you kind of look at kind of global gas prices, even just in the last, well, so far this year, we've seen incredible volatility on both the Europe and the Asia side, and also the US side, for a whole variety of reasons. And so we kind of need that kind of stability to basically come into the market to allow these you know, kind of end consumers, midstream players to basically have that security to kind of transition back into gas. I think that's kind of the big question going forward.
Yeah, Alex. Actually, just before I come back to Alex, I'd like to get your views on the specifically on the LNG space. But can I, just so the organisers, can I pull up the 4th polling question? I don't want to. I might get into trouble for asking this, whether we can or not, because the 4th one, it does relate to what we're talking about here, with oil and gas markets facing oversupply. Who's going to yield first? I don't know if it's possible to put that polling question up next. If you can, please do. But Alex, the IEA's views on LNG in particular, and where we're headed in this space. I mean, I'm sitting here in Qatar now, and we had you know, quite an energetic debate especially with the GECF yesterday on this. What's the IEA saying?
Thanks. Maybe I can, just before touching on LNG, I can say something more generally, but because we have this kind of missed point about demand growth in emerging markets on the screen. Clearly, when we look at this, we project this forwards in our scenario analysis in the World Energy Outlook, we see a dominant role for emerging and developing economies in driving energy demand growth around the world. That's a totally widely understood and widely known point. I think in the latest iteration of this, we did start to see the beginnings of a geographical shift within that. Up until now, it has been China that has been really driving the vast majority of that demand growth in those markets. We are starting to anticipate now a shift away from the period of rapid energy demand growth in China towards a slight rebalancing towards fast-growing economies in South Asia and Southeast Asia, in India in particular, and in Southeast Asia. And I would also add that we see that reflected in specific markets and technology areas. So we see that in electricity demand. When we go and talk to people about electricity demand growth, and I had this experience recently at a university class in Paris. I said, what's driving electricity demand growth? And the first hand went up and it said data centers. Second hand that went up and they said EVs. Both of those are important. However, if you look at the numbers globally, what's driving this picture more significantly are things like cooling, air conditioning, and other appliances used in buildings in emerging and developing markets, particularly, as I said, in regions like South and Southeast Asia. To turn to your question about LNG briefly as well, yes, the IEA has had a perspective for a couple of years now, highlighting the very significant new capacity coming online. So I think we have numbers at the moment looking over the course of this decade to 2030 of around 300 BCM of new export capacity expected to come on stream. So that's roughly speaking 50% increase by the end of this decade. And of course, in line with the comments that Sam made, this raises questions of where this new capacity is likely to go. So I won't revisit those points, but we see some capacity in a scenario looking at continued momentum in today's policy settings for Europe and China to absorb some of these volumes, and South and Southeast Asia. But we see a risk of oversupply markets by the end of the decade because of questions over whether the pricing will be competitive enough in those markets. Obviously, that potential oversupply creates potential opportunities for buyers. It also creates potential risks for suppliers in this market. And I think those are important factors to bear in mind moving forwards.
Okay, great. Thanks, Alex. By the way, we have put that fourth poll out. I can't see it on my screen, but it has gone out to our viewers, and I have got the results for it. And I just want to quickly go over them. So, with oil and gas markets facing oversupply, who's going to yield first was the question. OPEC Plus will extend production cuts. Did not get anything. Producers will accept lower prices, 20%. C, demand will rise faster than expected, 60% of government's intervention on 20 as well. Does that sound about right, Amena?
Sorry, the first option was OPEC
was
going
OPEC
back to
Plus
cuts?
extending cuts, yeah.
It's possible that they do that, but I just see very, very little appetite for them. I mean, it would be a matter of those 8 countries, again, coming to an agreement to cut supplies. And I don't see, I mean, it really depends on the market situation if they see a huge imbalance of oversupply, which isn't the case right now. Prices currently are kind of hovering around 67, 68. I'm talking about flat prices here for Brent. Again, which won't, encourage them to go back to cuts. I think they're kind of avoiding that. It is an option on the table, of course, if they see a huge imbalance in markets. But for the consumer, I guess, yeah, it's good news if this oversupply leads to a drop in prices. And as we're approaching midterms, and this is another geopolitical reason that's impacting markets, and something we're expecting that Trump during the midterms obviously would want lower oil prices. And by oil prices, he really means gasoline prices, which are already at an acceptable level for the US consumer. So given all these factors, Axel, I think that, I mean, it would be, I think the consumer would benefit the most. And if we look at the geopolitical factors impacting the price right now, I think Trump, if he were to do anything in the Middle East region that would impact oil prices, it would have to be now rather than later, because as we approach to the midterms, he would kind of favor that lower price environment.
Yeah. And by the way, the OPEC Plus extending production cuts didn't get any votes. But very quickly on the back of that, and I'd like to ask Alex this very quickly as well, but, and I will come back to you, Adrian, in a second. But what's happening to Venezuelan oil? Where's that oil going? What are traders doing with that oil?
Good question. I mean, initially, after we saw the headlines about President Maduro being airlifted out of Venezuela, him and his wife, to New York, there were the grand statements by Trump saying that they're going to be returning all of Venezuela's production. Venezuela, no doubt, and it has the biggest reserves in the world, but it's some of the most difficult oil to produce. This oil is like tar. It needs billions of dollars of investment, at least a decade of investment by very large IOCs. It can't come back to a capacity where we would be completely overwhelmed by the oversupply coming out of the country. Currently, according to Kpler's estimate, we see their production somewhere between 700 and 800,000 barrels a day. And they would like to go back to 2.5 million barrels a day. To reach that level, you need a major repair of infrastructure, an overhaul of the system to get rid of corruption, and $100 billion over a decade. How long is Trump in office, Axel? I think 3 more years, right? What happens when Trump is
That's it. Yep.
What happens when Trump is gone? Are these companies still going to have the appetite to stay in Venezuela, invest in Venezuela? So for now, I mean, I'm taking everything with a kind of grain of salt. Yes, we might see more production out of Venezuela, more exports, the easing of the sanctions and so on, but not the flood of supply and not the kind of supply that the OPEC Plus group needs to be concerned about.
Okay. Alex, very quickly, what do you think? Where's this oil going to go? What's going to happen to this market?
So on the supply side, it's interesting. We're talking about Venezuela, but what are we watching over the course of this decade? We're watching other parts of the Western Hemisphere. We're watching the new supply in the US, in Canada, in Brazil, in Guyana, of course, until recently unknown, but obviously now a very significant fast-growing player in the oil market, and in Argentina as well. They're playing a very significant role in keeping oil markets well supplied. On the demand side, I guess there's a short-term and a long-term picture. In the short-term, IEA oil market analysis points to modest demand growth. So I think just under 800,000 barrels a day last year, a similar, only fractionally higher number projected for 2026. In the longer term, I think increasingly we look at electric vehicle uptake as the most significant factor, varying between the different scenarios that we put out there. So to give you just one example within that, in the case of our stated energy policy scenario, the share of electric vehicles in car sales is projected to exceed 50% globally by 2035, so in a decade's time. What this means in the case of that scenario is a flattening of oil demand by the end of this decade, but clearly other potential pathways are possible, and those are reflected in other scenarios too. The consequence of all of that is there is an indication of continued requirement for investment in upstream oil and gas production. However, the majority of that, as we know over the last 5 or 6 years, around 90% of that, in fact, has been investment has been required just to offset decline rates from existing fields. So I think that's our overall, in a very brief form, perspective on the market.
Great, Alex, thank you for that. Adrian, I mean, you feel free to give your views on it, on any of these bits, including Venezuela, if you want. But stepping back again, what do you tell your clients that the world of multilateralism is over now?
By the way, Axel, I have to say, I'm thoroughly enjoying this webinar, listening to all our colleagues speak. It's really fascinating. Look, just multilateralism, can we just park that for 1 second, Axel? On Venezuela, for me, the key lesson or the key message out of Venezuela is that there is unlikely to be a huge amount of oil coming out of Venezuela exported over the short, medium term. We're talking about $100 billion of investment. Amena's already mentioned the fact that the quality of Venezuelan crude is difficult to market. Those international oil companies are unlikely to invest in Venezuela because they're going to invest in the long term. They're going to deploy capital over the long term, and they need regulatory stability, the rule of law, and that is not guaranteed in the current situation. I think that message brings a broader point about what we're seeing in energy. there is no shortage of capital in the world right now. BNEF, Bloomberg New Energy Finance, mentioned $2.1 trillion invested last year in low carbon, 1 trillion in oil and gas. That money is out there to be deployed. What enables that money to be deployed in these different geographies, in these different technologies, are a number of factors, two of which probably top of mind. One is regulatory stability, right? So you need to have governments that are committed to long-term growth plans and do not change when an administration changes. I think also the other thing is you need to have an industrial policy. You need to have an industrial strategy where investors see governments committing to a technology or an investment in a portfolio of energies that are long-term. The obvious example of that is China. I want to blow the trumpet of plucky little UK. If you look at what happened with our offshore wind industry, 2000, we had 0 gigawatts. By now, we've got about 16 gigawatts. We're the second largest offshore wind regime in the world. And that was enabled by a government, irrespective of the political ideology, that said, we want to be major players in offshore wind. So you had a government vision. They set up a regulatory policy, which was the contracts for differences, that enabled private sector investment to come in and to fund that growth, and obviously open the doors to this private sector. And we saw this industry grow dramatically. It's not perfect. We don't really have a strong.
Just to interrupt very quickly on this, Adrian, are you optimistic about this? Because I believe the we've just launched a major release of renewables contracts, I think, for bidding. Yeah. Are you optimistic that this is going to run smoothly in this current context?
I doubt it's going to run.
NIMBY process.
I doubt it's going to run smoothly. But the point is, you need governments to back these long-term investments so that private sector investment comes in for the long term. There are challenges that you've just highlighted, like NIMBYism, planning challenges. Those we have to negotiate. But I think the important message is, if you want long-term investment, governments have to think long-term, and they need to ensure that.
Come on in.
Yeah, I was going to build on that, because I think the bigger question is, how do you get at a country level a competitive advantage in energy? And if you don't have it, that's a massive disadvantage. And I think at the moment, some of the assumptions of those countries that have got the competitive advantage are going to be exporters. But linking to the point Adrian was talking about around industrial policy, I suspect those countries that have got access to cheap energy, whether that's oil, gas, offshore wind, solar, will look at how do they reshore more of the industrial base and take advantage of that competitive energy position. And you only have to look sort of a little bit further east of where we are in the UK, at parts of Eastern Europe that have historically had the advantage of cheap Russian gas, as to what happens when you lose your competitive advantage. So I think this politics of energy, you need to look at who's advantaged in the cost of supply. I think that's a big point.
Is the US being way more savvy than Europe right now, would you say, generally?
I think the US is, trying to build options. It's developing.
But they're playing it right. They're playing it right, the US, in your view.
I think they're developing options, but I would always be a little bit nervous as to who's benefiting from those options, because at the moment they're certainly using their ability to export gas as a big lever in the trade agreements that they're negotiating. But equally, there's a massive push to reshore manufacturing to the US, and that will require consumption of energy. So at some point, those policy objectives potentially clash with each other. And I suspect that America First is going to make those countries that have increased dependence on, well, any one supplier, but the US in this example, a little bit nervous. Because I was just going to say, for me, diversity is the key to security. So those countries that are switching, dependence on Russian gas to dependence on US gas haven't really achieved security, because they've not achieved diversity.
I know it's very political, this, Alex, is a political question, but what is the IEA's position on this, and the US? And, is the US being the savvy pragmatist?
Well, Axel, you asked as well about multilateralism, and I think I am kind of contractually obliged to stick up for the role of international bodies and international cooperation in the energy space. And as it happens, this week is the right week for me to do that, because at the IEA we have our every 2 years a ministerial meeting, which is happening tomorrow and Thursday here in Paris. And we'll be bringing together, at the last count, I think around 55 senior government figures, including from the US, and I think around 1,000 delegates in total, to discuss the kind of issues that we've been discussing on this call and in this webinar today. So ensuring energy security, including for partners like Ukraine, ensuring secure supply chains around critical minerals, ensuring affordability and competitiveness around energy, and a range of other issues too. As you can imagine, we'll be talking about the role of AI in data centers, and we're bringing in industry partners as well. So I think from our perspective, there are still significant common areas of shared interest where international cooperation is valuable, and we can bring a range of partners together around the table, and that includes members like the United States. So there are important areas of common interest too.
I am going to put you on the spot again now, though, Alex. You know, we had a discussion yesterday here at Al-Attiyah, and I'm the messenger here. You know, I'm not providing my views on this, but someone described the COP process as a busted flush. Are you optimistic about the COP process?
So we continue to work with, as we have with the presidencies of the COP process. We continue to see many countries around the world very engaged and very keen to demonstrate the value of cooperation at this level. I think it is also the case that, you know, if you look at the analysis that we put out in the last World Energy Outlook, that the degree of commitments that have been made in the latest round of NDCs have not been as strong as hoped, and as such are not in line with the most ambitious goals set out under the Paris Agreement globally as well. So clearly there are challenges on this pathway, and as we said at the top of this discussion, this issue has become a low priority for some governments, some countries and others around the world, but it remains a very significant high priority for others as well.
Okay. Axel, can I just butt in very briefly? Your multipolar question, is it the end of multilateralism? Just briefly, I think we're seeing a world now that's clearly a multipolar world. We're seeing great powers emerge, and it's a world of spheres of influence. You can see that happening. I think I take comfort from the fact that the middle powers are going to have to assert themselves more. I think the comments that we heard from Mark Carney during Davos were really important. And I think those multilateral institutions that were established post-1945, they are still valid and important, but they need to be revisited to reflect the world, how the world has changed. If you think of like the UN Security Council, effectively those 5 members are the nuclear powers. There are other powers around the world that probably need a bigger say from the global south that need to be part of that decision making. So I think multilateralism is not dead, it's under pressure, but it needs to be renewed and revisited.
Okay. Yeah, I'm glad you mentioned Canada, actually, because I know that Mark Carney was here in the Middle East last week, and I think some deals were done in Qatar as well. I don't know what the deals were. I don't know. Maybe Amena, maybe you can shed some light on this. But you know, the Canada-US relationship. You know, I wonder, is Canada still trading with the US? Or are they going to switch off crude oil and gas and electricity supplies? I don't know.
Yeah, I think the Canadians want to diversify that risk. Obviously, from Mark Carney's speech, we could clearly see that, they're not in agreement with many of Trump's policies. A lot of leaders in the world feel the same. So diversifying that pool, working with other countries, diversifying their partnerships across the globe, I think that's something very important for them to be doing at this time.
Yeah. Okay. Does anyone else want to comment on Canada or not? No, okay, I'll tell you. Okay, good. Look, I'm amazed how quickly the time's gone. I'm not going to. There's not even a time for another poll, which is fine because it's sort of taking us in areas that I don't necessarily want to go back to. But there are a few questions come in, and one of this is quite an interesting question. I don't really know who to put this to, but the question is this: the uranium renaissance is driven by demand for and from AI data facilities. Why are renewables plus batteries insufficient to meet this demand? I don't know who wants to take that.
Can I quickly chip in on that?
Please do.
I'm going to read uranium as nuclear in its broadest sense. Data centers need reliable baseload power. You can get a degree of that using renewables and battery energy storage, but the reality is, if you look at what's happening in the US, if you can't get a power grid connection, you're probably going to go to natural gas feedstocks to feed a combined cycle gas turbine generator on site, because the gas provides that base load, which is why you've got some of these data centers and hyperscalers that are looking at potential nuclear supply from either power stations that have gone offline but are still active, or existing nuclear power stations. That's the reason why. And more broadly, you're seeing a renaissance in nuclear, because back to the comments I made earlier and that John reaffirmed, you need a portfolio of sources to manage through the energy transition.
Yeah. Alex, you want to say anything on nuclear, or John?
Yeah, I mean, maybe I can combine a few things here. The first one is the data centers point. We've not dwelt on it a lot. We see, roughly speaking, a tripling in electricity demand from data centers, in part driven by the requirements of artificial intelligence out over the next decade. That is significant in its own right, but it's much more significant and it's heavily concentrated in certain geographies, most notably in parts of the US, also in China and Europe. And that's creating those intense strains that Adrian mentioned, which means that in particular we see this squeeze on the supply chain for natural gas turbines. So this points us in a couple of other directions. One of them is the nuclear, where we do see this renaissance globally in interest in investment, both in large-scale reactors, but also in SMRs. And the technology sector is now playing a significant role. We see, I think at the end of last year, we'd counted around 30 gigawatts of agreements for power from SMRs from technology companies. But I would also say don't count out the role of renewables and batteries as well. We haven't talked about batteries so far in this webinar. We're seeing explosive growth in the rate of adoption of new capacity for battery storage around the world. I think something like a 12-fold increase from in the first years of this decade, and I anticipate very significant growth again in 2025. What connects all this together? Grids. There are very significant shortfalls around the world in the ability to connect the new demand from things like data centers and the new supply and the new supporting facilities such as batteries all together. And there's a very significant increase in investment required there.
Yeah. And look, you're right. We haven't talked about batteries, and maybe I should mention here, and I think I'm right in saying, even despite the geopolitical tension and the economic uncertainty, 2/3 of all energy spending, I think I'm right in saying, is already flowing into clean technologies, whether renewables or EVs, storage, grid modernization, new fuels. 2/3. So we are talking about a restructuring here, and we can't lose sight of that. I think is another important part of the context. John, Amena, and Samuel, let me just get some closing thoughts from you as well here. Clearly a lot of, and Amena, I'll start with you. Clearly a lot of what we're talking about now, and we touched on this, is driven by US policy and what is coming out of the US. If that were to change dramatically, is there a sense of there's no turning back in a lot of this now?
I think the good thing, Axel, that President Trump did is he shook up the system. He shook up the system, meaning that, I mean, we've been ignoring or demonizing the upstream sector for a number of years now, just like after COVID. The whole sector became completely demonized. OPEC became demonized. Every single producer of oil and gas was demonized. So with his return into office, it became normal again to invest in the sector and the importance of the sector. And I think that needs to continue, and not just for upstream. And you said something important around this growing demand. We're going to have demand growing from various regions. Africa alone is going to, grow in demand. And to feed that demand, there needs to be investment across the board in renewables, in nuclear, in upstream. So continuing investment in energy is critical. And I was, a couple of weeks ago, I was in Riyadh, and there was the EIF, EIA, OPEC forum, which gathered a number of experts. And an interesting idea there was that AI or data center companies, they're going to be turning into energy companies soon to solve their own problems. So this matter of like injecting new capital into the system might need to come from these companies that are looking to grow at a faster pace. So for government and policy, I hope there are no more U-turns. I hope that there's a realization that we need to grow in all segments and not just focus on one type of energy.
Yeah. Samuel, has there ever been a more exciting time to be in LNG research?
You could have asked that question every year for the past at least 5, and I would have said no. Yeah, it's continued to be interesting. I think the next couple of years will be particularly interesting. Like I said, that kind of demand rebound is really key. I think LNG, well, global gas really has a bit of a Goldilocks problem. You want low prices because that incentivizes kind of demand creation in especially those bits of kind of India in particular, where we've kind of seen historically you need to get a price below a certain level, typically roughly around the $8 mark, to really start to kind of pull demand and kind of feed in a little bit into the power sector, but also into kind of competition with naphtha, etc. But you don't want to go too low, because then we start to see the kind of the issues that we saw kind of in that kind of post 2022 era, where you end up with a bit of a gap in kind of new projects, both in terms of actual liquefaction capacity, but also investment in the upstream to get that gas to the terminal itself. So basically, trying to see how this market can really kind of sit within that reasonably narrow band. I mean, you basically, given that we kind of a real big kind of supply floor in the global LNG market is typically around the US, short of marginal cost. So given that kind of, when we're looking kind of to the end of this decade, we're talking about a Henry Hub kind of price, which is what, roughly around $4 plus minus 50 cents. And so we need kind of add 15% kind of for rough transportation fees, maybe $1, $2 for the kind of the freight costs. We're talking, yeah, kind of $6-ish, roughly. That basically, that's quite a narrow range between kind of 6 to 8, and that's basically kind of quite key for us.
Of course. Okay. Thanks, Samuel. And finally, John, you know, similar sort of vein, this question, has there ever been a more complex time to be the energy strategy and transactions partner for EY? You know, given the sort of advice I imagine corporates out there are clamoring for right now.
Complicated is good in my line of work. I started with the dimension of time, so let me end with that, because I think it's important to recognise that the political cycle, you know, 4 years in the US, for example, is a lot shorter than the capital and investment cycle that our clients are trying to navigate. And I think it's really exciting to operate in a world that is super capital intensive. Energy demand is growing. We're seeing the mix changing, more electrification, more of that coming from renewables. But to meet that growth, I think the answer is all sources are needed, because it's that diversity that delivers security. So for me, that's really exciting, and our clients are trying to plan through the different scenarios and work out how to deploy that capital over the next 10, 20 years so that they will continue to be profitable and build those options that we've been talking about.
Who's getting it right?
Only time will tell, I think. Axel is the honest answer. I think the people who are getting it right today might not have been the ones who you thought were getting it right 5 years ago. But to me, the conversation in the energy world needs to start from the demand end. Historically, we've started from the production end, and a lot of this call has been about production. But the ones who get it right start from the demand side and create the options to meet that demand through different sources of hydrocarbon, non-hydrocarbon, electricity, biofuels. And I think they will be the ones who over time will be seen to get it right, because they'll have the options, and that's what drives value.
Okay, look, I've got to stop it because we've gone over time, and I could go on for another hour. It's been a really fascinating discussion. I mean, of course, there's a lot about. We just haven't had the time, but what we have talked about, has been super. So I want to thank all of you, Adrian, Alex, Amena, John, and Samuel, for this discussion. I'd like to encourage everyone who's been watching. There's the code on the screens to fill out the post-event survey. It can also be filled on the same event page as well. This is going to be available, this webinar, on the platform, so you can, if you've missed it, you can look at it, or you can watch it again. Thanks so much for attending this series. This series is, of course, supported by the Al-Attiyah Foundation in partnership with LSEG. I've thoroughly enjoyed myself. I hope you have too. We look forward to welcoming you to future webinars. Thanks very much indeed.